Yeah, I mean, straight to the outlook. And by the way, I would have done the same thing. Go right there. You know, revenue in the fiscal first quarter, $78 billion, plus or minus 2%. You know, a consensus was really high. But like going into this, it's a very simple equation. There were many names from across sell side and buy side that said they wanted to see Nvidia beat revenues overall in the current period by the multiple billions of dollars, you know, against consensus. And so one thing I would say to confirm something is that the fiscal first quarter, which is the April quarter, does not assume any compute revenue from China in the outlook, does not factor in any compute revenue of China. That, I guess, is something to check off the list. It was one of the questions we had.
I want to bring in Jay Goldberg from Seaport Research Partners. He's senior analyst for semiconductors and electronics. He joins us also from San Francisco. Jay, anything in here that confirms your thesis, or does it sort of go against the sell rating that you have on Nvidia?
Yeah, I mean, it's a good quarter. It's a good quarter and a good guide. It's above consensus. It's above my expectations. But good for them. We're still waiting to see a lot more detail.
What do you want to see?
I want to hear more how to talk about gross margin for next quarter. I think that's going to be in the CFO commentary.
Yeah.
Ed, jump in.
Do you have
Go
that?
ahead.
Yeah.
No, I don't have it yet, but it will be in the CFO commentary.
But 75.2% versus 75% expectations. I mean, can you use that as sort of a guide for how the company could see first quarter?
I mean, on a basis points basis, look, like margins are impacted by a number of things. It has been a sell side question on prior calls, the percentage of a server that Nvidia contributes to. And again, what's changed in the period is Nvidia starting to sell, for example, CPUs as standalone product. And that was a part of the Meta deal that was included. They talked about CoreWeave being an early user of CPU as a standalone product. You know, how does that impact the margin profile going forward? But yeah, I mean, what they do is they own more of the server, and that has been one of the ways in which that they've got margins to where they are, and clearly being 0.2% above, where the hopes were is not a bad thing.
Yeah, I'm looking at that CFO commentary. As we know, revenue expected to be $78 billion plus or minus 2%. Ed, as you correctly pointed out, not assuming any data center compute revenue from China in their outlook. GAAP and non-GAAP gross margins expected to be 74.9% and 75% respectively, plus or minus 50 basis point. Inclusive of a 0.1% impact from stock-based compensation expense. Just looking at what else we have here. Operating expenses, GAAP and non-GAAP operating expenses to be approximately $7.7 billion, $7.5 billion respectively, including that's inclusive of $1.9 billion of stock-based compensation expense.
A headline getting my attention is Nvidia says that hyperscalers were just over 50% of 4Q data center revenue. Jay Goldberg, I want to repeat that headline for you. Hyperscalers were just over 50% of fourth quarter data center revenue. Is that a sign that Nvidia is diversifying revenue? Who made up the other half of data center revenue? Is it automakers? Like, who's buying?
Well, I think that's one of the most interesting things that's taking place with Nvidia is they're not just reshaping the semiconductor industry, they're trying to reshape the cloud computing industry as well. And that's why we see all these neoclouds getting investment from or support from Nvidia. Nvidia would much rather have 100 neocloud customers than 3 hyperscale customers.
Of course.
And they're doing a really good job of creating that, willing that into existence.
So those other customers, Ed, come on in here. Those other customers are like the CoreWeaves and the other neoclouds?
Yeah, I mean, what is still important and is fact is that obviously the vast majority has been the hyperscalers plus Meta, right? And so they've wanted to kind of switch between a story, what they used to call an AI factory. At first, an AI factory was an on-prem data center that enterprises and maybe some of the neoclouds would operate themselves. Now an AI factory is what you define any data center that's running AI workloads in. So they have chopped and changed between that story, but its origin was that they wanted to go beyond the hyperscalers to have people own their own infrastructure for AI workloads if they were, say, a software company or an enterprise of a slightly different size.